This is how much I love you guys. It's my birthday and I'm still making a video to inform you about the markets. I'm still short on gold and long on the Nikkei, which is very quickly turning around on me. Now on the WT wire on the watchtower, what we can see is we had a headline come in not too long ago, only about 6 hours, pretty much the middle of the night for me. And it says Iran's military fired at least 2 missiles at commercial ships transiting the Strait of Hormuz per Axios. And this headline very quickly had a negative impact on the Nikkei and a relatively negative impact on gold as well. However, gold seems to be really struggling to break down. We've seen price reclaim this 50 moving average on the H4 and not manage to break back below, indicating that buyers are actually having a little bit of a defensive position here. Now again, on the watchtower, we are able to look at what the banks are actually doing. So if we go to assets and we go to gold, we can see the banks are actually having an interesting point of view. So we can see Credit Agricole has a target at 5,420. ING has a target at 4,600 and the World Gold Council has a target at 4,500.
Just a quick thing before we carry on, if you're enjoying the daily uploads on this channel and you're getting value out of all of this for free, the only thing I ask of you is that you please subscribe. It helps me and my team out massively. Right, let's carry on.
And on this table, we can see each bank's individual point of view. MUFG is bullish, Natixis is bullish, ING is bullish, Westpac, Unicredit, RBC Capital Markets, Credit Agricole and MUFG again are all bullish, with only 3 bearish readings by London Stock Exchange Group, SYZ and BNY. So the question is gold still a good short position? Well, from my point of view, it is still completely valid. We have the high that retested previous structure, granted not huge amounts of structure, but it is valid on lower timeframes. We've had the rejection. We also pulled into the fib zone, and again, we've had that rejection. And now we're starting to see the daily time frame continue lower, and we're having this daily golden cross, or this death cross, as certain people call it. As for targets, I'm first looking at 3,500. This is where my first take profit level is. And beyond there, we're just going incrementally down to 3,400, 3,300, 3,200, all of these psychological round numbers, and just letting this market go. Ideally into this 200 weekly moving average, but that's a long time away. We will see if that happens. And now we can see that gold is actually getting a slightly better score than previously on the edge finder. We can see the jobs market bias is bearish, inflation is bearish. However, economic growth is actually turned bullish. COT positioning is neutral. Technicals are bearish, as well as crowd sentiment, which is retail sentiment. That's who we want to counter trade. We're going to go into that a little bit more in a second. But on the edge finder score over time, what we can see is it peaked at a very bearish reading. It was roughly -8 to -9. Since the peak, or the low if you will, gold's score has only been increasing over time, which can show the quality of this short position that we've got open is actually degrading slightly. However, that doesn't mean that this is now a bullish market. Of course, if we take a holistic view, this is still fundamentally bearish. Now back to the watchtower. What is super cool, I absolutely love this, is a brand new feature I published yesterday. If you go to my terminal, you create your own dashboard, you can add a WT advanced chart. Now what this is a chart where you can plot all sorts of different things. So you can have the score of the asset printed along with price. You can have different things like opening ranges if that's something you trade on lower time frames. So as you can see here, we have seasonal forecast levels, we have key levels, we have central bank dates plotted on the chart. And best part of all of it, we have news printed directly on the candles. You can just hover to see the full headline. Back on point, what I wanted to show you was the retail average feature. So if we go out to the H1, never mind, the H1 isn't large enough, we'll go to the H4. We can see retail average long price and retail average short price along with the retail pair detail over here on the left. So we can see this market is actually very mixed. So we've got long 50% and short 50%. So what this does is we can actually see where the average retail trader's long position is and where their average short position is. So we can see on average, they are both underwater. So they've gone short here and they've been buyers here. So we know that retail are losing in this market, which is always a nice sign. Something that is a little bit concerning for my short position, however, is COT leveraged funds. We can see they've actually been adding positions into gold over the past 3 weeks. We can see they went from 86% long to 90% to 89 again, and then up to 90% yet again. On the long versus short percentage view, we can see that gold has actually seen this increase over time. So gold is still a very crowded market, but rightly so. This isn't a crowded market we would necessarily want to fade. And of course, if we then pay attention to seasonality, July, August are bullish, September's bearish, October bullish, November bearish, and then December is bullish again. So in terms of historical price action, we are on the wrong side, technically speaking.
Over the last few years, I've been helping traders from all over the world become genuinely profitable, using a real strategy in an industry that is honestly full of lies. And between all of my students, we've managed to generate over $7.5 million in profit. I have a private program where we go through everything A to Z, from learning the strategy itself to how it's applied and why, but also the economics, risk management, portfolio management, everything you need to be a real trader. And better yet, you get one-to-one calls with me every week, and you can directly message me at any time of the day or night. And this ensures that everything is personalized to your needs and your goals. So whatever it is that you struggle with, that's what we work on. Whatever it is you do really well, that's what we double down on and take even further. I've had traders fully transform, and I keep this group private and application only on purpose. We've had over 500 applicants, and we've currently only taken in 6 traders. And this ensures every mentee is serious and they get the time and attention that they deserve from me. If you want to stop wasting time and take your trading to the next level and really bet on yourself, make sure you apply below. If you qualify, you and I will be speaking very soon.
So with all of this said, if I am wrong on gold, I am happy to flip bullish very quickly. I am prepared for that type of outcome, and we discussed this in yesterday's video, but we'll go over it again for anyone that may have missed it. So gold has come down to this really strong weekly level of support, and something we've been paying attention to is the fact the H4 and lower time frames all look very dreadful. They look really bearish and detrimental for buyers. However, with the weekly time frame actually looks really good. So this looks like a very nice, healthy pullback on a high time frame trend. Don't forget, gold has had a multi-year rally to the upside. It's very natural for it to have some sort of pullback, a mean reversion, and then maybe a continuation, as well as our weekly RSI becoming oversold. So if we draw our Fibonacci tool from the low to the high, we can see that this is actually a 50% retracement of this low to the most recent, well, the all-time high. So is this actually just a really good time to buy gold on a discount within this higher time frame bullish trend? Well, yes, I think the argument for that is increasingly getting stronger. However, at the heart of it, I am a fundamental trader. The edge finder is bearish. The technicals on the H4, which is my execution time frame, are bearish. So I'm going to stay with my bearish trade idea until I've been proven wrong and it's confirmed to be a bullish market again. Something that is really not helpful for us is the US dollar right now. Something I was paying attention to was this fib level off the low to the high, and we saw this 50% retracement. This is another thing that triggered me into my gold long position. However, what we've seen from this point is a failure of a rally. So we saw a push to the upside with a loss of momentum and actually a now lower high getting printed relative to the previous high. So it is possible that the US dollar can now continue lower back into this range below 100. And this is partly due to the weaker data we've had out of the US. And that has led the markets to start repricing the Fed rate hikes. Initially, the markets saw wash and the Fed is very hawkish, leading to a lot of dollar buying and repricing for rate hikes. However, since that poor data came out last week, we've actually seen the rate hike probabilities dropping yet again. So we now have a 90% probability of a hold in July, which is the next meeting, only a 74% chance of a hike in September, a 57% chance of a hold in October, and an 81% chance of a hike in December. So this could lead the dollar to getting repriced back to its pre-Fed price. This is when we had wash come on, and this is the start of this dollar rally that we saw. But as I said, it's my birthday, so I'm not going to sit here for much longer. Guys, have a fantastic rest of your day. Thank you for watching. Please make sure you've liked and subscribed, and I'll see you all very soon. Stay safe and don't get margin called.